You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means we are back. It is time once again to talk a little bit of futures options. Yes, it is time for TWIFO. My name, of course, Mark Longo from the Options Insider Radio Network. We've been doing this options podcast dance here for nigh on 2 decades. Wild to say that out loud. Of course, make sure you subscribe to the full network, wherever you get your favorite shows. And of course, if you want a smattering, a sprinkling, a little bonus, check out the Pro, theoptionsinsider.com/pro. Awesome deep dive into all things vol with Dr. Vix on the Pro this week. Live streams, giveaways, ridiculous exclusives like the vol death matches, all sorts of fun, options oddities. You name it, we get up to all sorts of mischief. Theoptionsinsider.com/pro is the place to go. And it's always fun when we get to do a Just the Facts, ma'am edition of the show, because that means I get to choose what we talk about in the movers and shakers. Here we go.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down everything lighting it up to the light side, a.k.a. the upside, and to the downside over there at CME Group this week. And you know what? If you check out that chart that we tweet out right before showtime, yet another pro-level bit of data that we give you folks absolutely for free because we like you folks, then you will see that it's kind of a bifurcated week out there at CME, kind of a split week. We've got roughly 50-50. I would say the downside, the dark side, slightly edging it out, maybe 55-45, 60-40, somewhere in that ballpark. Even though the largest percentage mover this week is to the upside. Can you guess what it is? You can probably guess the complex. Can you guess the product? I guess we will find out. I'm going to keep you in suspense because we're going to the dark side first. My game, I get to choose, listeners. A number 5 to the dark side, a product that was on a lot of your minds not too long ago, kind of fallen off a little bit lately. What am I talking about? It's silver. falling almost exactly 3% again this week, 2.99%. Are we going to talk some silver today? You know what? The numbers might say no. The movement might say yes, but the volume might say no. Only 17,000 contracts changing hands in silver this week. So a very light week out there in silver. I guess you folks have all moved on. You're fickle. You're a fickle bunch. You know, you all dive into silver and all of a sudden you're washing your hands. This is lighter than silver would do on a normal week in August. So 17,000 contracts is nothing. So interesting. You folks, have you washed your hands of silver? These numbers certainly seem to indicate that. Number 4, out to the land of a product and a complex indeed that has been moving quite a bit of late. They are one half of the Chinese equation. The other half is usually copper. What am I talking about? It's soybeans and all of the constituents, including soybean meal. Number 4 today, off 3 3/4%. Got a little volume going up out there, I should say. So 59,000 contracts going up in soybean meal this week. So nothing to sneeze at. We might hang our hats out there. Number 3, we're going back to the shiny stuff. It's platinum, off 4 1/3% this week. Before you get all hot and bothered about platinum, it makes silver look action-packed. Only 1,100 contracts on the tape in platinum this week, so probably not going to hang out there. And you know what? If you want more precious metals in your life, how about number 2, palladium, off 5.5%. Just a rough week for the shiny stuff out there. And by the way, if you think platinum was quiet, palladium makes platinum look action-packed. Palladium, 511 contracts. So less than half of the volume of platinum, which is, again, kind of wild. So we're not going out there. And then the big dog to the dark side. I was just talking about this on the Futures Rundown yesterday. The conversation continues today. Yet another reason why you should be subscribed to the full network. The Futures Rundown, very much the sister program to this one. Why? Because number 1 to the dark side this week is Oats, off 7 1/3%. This product I find mystifying. I've gone out about it at length many times. I won't belabor it. Just to say, the thing obviously moves. It is number 1 to the dark side on our movers and shakers this week. And yet, for whatever reason, no one can be bothered to trade an option on. I pulled up the numbers right before showtime. It makes palladium look explosive. A whopping 3 contracts have changed hands in Oats. I've talked to a variety of people. What is it product-wise, structurally? There is something inhibiting flow out there. I will get to the bottom of it, listeners. I will be a sleuth on the case here. But usually, volatility it primes the pump, if you will, for a little bit of options flow out there. We have vol, but we have no options flow. So kind of a weird thing. Something is gumming up the works as we keep climbing to the number 5 spot. By the way, if you are an Oats aficionado, an Oats expert, and you think you have the reason why nobody touches Oats options, hit us up. Let us know. I'd be curious to hear your thoughts. All right, to the light side we go. And we're keeping the action alive in the beans, one of the other components. It's soybean oil, moving in the other direction, up nearly 3%, 2.91% this week. Soybean oil, lighting it up, 170,000 contracts this week, so might be convinced to hang our hat out there. Number 4, we're keeping it in the ags. It's the other side of the wheat equation. We usually talk Chicago wheat on the show, a.k.a. SRW wheat. We're going to KC today, a.k.a. HRW, a.k.a. hard red winter wheat. Say that 5 times fast. Up 3.15%. If you're wondering, this was number 1 to the light side last week as well. So been a banger couple of weeks for hard red winter wheat. Putting up some numbers this week as well, 90,000 contracts. So, you know, the ags making a good argument for themselves this week. And then number 3, we're getting to a complex I think a lot of you expected to be dominating the light side this week. We're getting to energy. It's heating oil, number 3, up a little over 5% since our last show. It was number 4 in the other direction last week, off 2.25%. By the way, if you're wondering, heating oil has been lighting it up a lot of late. Is it putting up the numbers? The answer is no, 3,300 contracts. So, spoiler alert, probably not going to hang our hat in heating oil this week. On number 2, keeping it in energy, but again, maybe not in the product you expected. You're thinking I'm going to say WTI here, but no, it's Brent. A Brent FSM to be specific, up 6.5%. I know a lot of you don't think Brent and CME, but they do have contracts there. If you're wondering what is the FSM, these are futures style margin. Bear with me, it's kind of wild. These are, usual options. You come in, you see the premium, you buy them, and you pay that premium, and that's it. You've paid your amount for that options contract. That premium isn't going to change on you. It could obviously lose value, you could lose money on it, it could gain value. But in terms of, you're not going to be charged more for that premium if it gains. Future style margin, as the name implies, margined like a future. So they are marked to market every day, which again is kind of wild for a lot of people. But they're up 6.5% this week, and it's not stopping the volume, 27,000 contracts. So interesting. We don't get a chance to talk those very often on the show. Maybe we'll mix it up out there this week. And then the number one light side mover, you can probably guess it. It's been dominating a lot of the headlines as well. It's gas, at least in the form of RBOB. What the heck is RBOB anyway? Check out the futures rundown. It's in our intro. Up a little over 9%, 9.04% this week, listeners. So a wild week in RBOB. It was number 4 in the same direction last week, up about 5%. So RBOB piling gain upon gain. Before you say, all right, we're going to RBOB this week, pump the brakes. 250 contracts only coming across the tape out there. So I think we have some choices to make. But you know where we have to kick things off? It is time for the Equities Spotlight.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, to the equities we go. A lot of people have a lot of questions about what's going on out there. I do as well. Everyone does. If you don't have questions about this equity market, you are just not paying attention. If you want to find out more info to answer those questions, you know where to go. CMEgroup.com/TWIFO, TWIFO/TWIO also gets you there. And then once you're in and logged into your CME account, listeners, getting that drop down, go into that drop down. You're going to go down 4 slots to equity indexes. It is an alpha order list after all. We'll kick it off in the big dog US index, E-mini, and of course the S&P 500. We have seen a lot of back and forth this week. A lot of green on the screen today. Some red, dare I say it, creeping in to the markets out there. So equities at one point were off about 1%. Looks like they are gaining some back now, off about 1/3% in the S&P right now. But still, obviously, an interesting, an action-packed day, and indeed an action-packed week out there in the equities. Is that translating into some volume? The answer is yes. A little over 3 million contracts in the E-mini right now, about 3.1 million to be precise. And you know the drill. There's a lot of zero-day paper lighting it up, including a lot of action going up this week and indeed today on the 7,100 puts. Again, as we're coming into the start of the show, we are north of 7,100 in that E-mini future, 71, roughly 71 and a quarter. And it was those 7,100 puts that were lighting up the tape most of the week out there, doing about 31,000 contracts this week. A good chunk of that, 22,000 coming today for obvious reasons. A lot of whipsawing in the market out there today. About 4,200 on Monday, slightly opening there. 1,200 on Tuesday, slightly closing. 2,700 yesterday, then a whopping 22,000 today. If you're wondering the OI on this strike coming into today, only 3,800. So a ton of opening flow. Those puts obviously trading fast and furious, so they are all over the place. If you are wondering, though, the average price coming into start of the show on all that volume today was about 6 1/4. So again, not giving these away out there. Can we blow back through 7,100? Well, we just did not too long ago. So we could easily see these be deeply in the money again by the end of the session out there. If you're buying these for 6 1/4, that's what you're hoping for. The clock is ticking. If you're selling these, you've got some cojones out there, listeners, because stepping in front of anything in this market is kind of wild. Speaking of wild, listeners, you know, we expect some put action, zero dated. How about some upside call action? You know, we always talk about people picking up the proverbial nickels and indeed pennies in front of the steamroller, blasting away on far, far out of the money puts. In fact, we filter a lot of that flow out for you every week, so we don't have to worry about it. But there's some interesting stuff going up to the upside this week. Again, not something we normally see. We're used to the put bombers, 6,500, 6,000 puts, all that fun. How about the 7,500 calls expiring today? Can we get to 7,500 in the S&P today? Well, 25,583 of the 7,500 calls, again, expiring today, went up yesterday. All that opening flow. Wild stuff. If you're wondering, they actually traded for a nickel. So I have to assume paper was buying those. I don't think they found a nickel bid to hit on those. If they did, more power to them. But usually we see a lot of far out of the money put harvesting. Can we see some of that on the call side too? Obviously, it's a 7,500 strike, so it's pretty far out of the money, but also takes some cojones to be net short units anything in this market right now. Worth noting, there were about 6,300 of the 7,200s that also went up, so it is possible they did it on a funky ratio, 7,200, 7,500 ratio vertical, even though it doesn't really line up very well. Those 7,200s, by the way, those are still pretty far out of the money. And they were not giving those away on Wednesday either, trading for around 5.25. So if you paid 5.25 for those, you might be regretting that right now. If you sold them, again, you had to sweat a little bit, but congrats to you. You're pocketing most of that 5.25 right now. So interesting flow on both sides of the ledger out here in the S&P. How about maybe some flow you might expect, a little bit more psychologically important levels lighting it up, like the pars, the 7,000s. Those were pretty active this week as well. These are the ones expiring on Friday. So tomorrow, the 7,000 puts, those have been trading actively all week long, every day this week. The par puts have been lighting it up. Nearly 6,000 on Monday, mostly opening. 7,500 on Tuesday, slightly closing there as we've been, again, whipsawing around a little bit. 5,600 on Wednesday, aggressively closing then. So folks bailing on those par puts as we retreated from that strike. And then today, coming back in, 7,800. That's against an OI of 5,200. So opening flow today again on the par puts. I have to imagine a good chunk of that maybe when we just dipped down about an hour or so ago in the S&P. All of a sudden that par strike looking a little bit more relevant. Looked like they might be in play. Speaking of being in play, let's go out to the Russell 2000 really quickly as well. There's been a lot of talk about the rotation out of large caps into small caps. Folks were certainly rotating out of small caps earlier today. The small caps are off about 1%. By the way, of course, if you want to see the data for yourselves, pop out of the S&P. You're just going to go down 2 slots to the Russell 2000 in that product list, listeners. As we're coming into this segment, 2787 is where the Russell 2000 is hanging out. Kind of actually unched on the week right now, which is interesting. But again, 2,700 is where that future is. We've seen a ton of action on these 2,700 puts expiring tomorrow. So again, psychologically important levels lighting up the tape. They've been very active. They've done about 2,200 contracts, which, by the way, nearly 40,000 contracts going up in small caps this week. So that's a decently active week for them. We've seen many weeks, 15, 20,000. So you're talking roughly 2x that flow out there this week. And the big dog are the 2,700 puts expiring tomorrow. Again, 2,200 of these have gone up this week, including 600 today. If you're wondering, again, we're whipsawing all over the place, but the average price today is about 2.75. That's up from $1.50 yesterday. So they've nearly doubled in price since yesterday. 300 traded yesterday, almost 1,000 trading on Tuesday, mostly opening there. So, and about 350 on Monday. So 2,700 puts, the name of the game this week in small caps. But if you're saying, I want to go a little bit farther out, because there's also usually some interesting activity a little bit farther out in the small caps, well, don't worry, we got you covered. June downside was where the action was this week in the small caps, listeners. In particular, I mean, if you pull up the tape right now, you will go see that June is where a sizable amount of paper is, including pick your put poison, 2,700 puts, 2,600 puts, 2,500 puts, 26 quarter puts, and now 2,400 puts, all lighting it up out there this week. So interesting stuff. A variety of puts and put spreads trading outright there, including looks like a 26 quarter, 2,400 put spread, lighting up the tape today for about $33.75. If you're wondering what's that 2,600 put going for outright, it's about $44.75. If you like the 2,500 puts a little bit better, those are 28.25. So obviously you can do the math on that put spread if you are intrigued as well. Maybe like the 25 quarter puts better. Those are going up for nearly $29, listeners. And all the way out to the 2,400 puts, like we said, lighting it up out there this week as well. Those are going for $16.33 today. So again, A lot of action in June downside and some very near-term front week downside in the small caps this week. But now it's time for us to keep on rolling. We talked at the top of the show about what's lighting it up on this Just the Facts, ma'am edition of the show. And I think, the Ags are making a good case, so we have to head out there next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk Ags.
All right, everybody, welcome to the Ags. Again, they don't get a lot of love in times like this when everyone's fixated on equities and they're fixated on vol. They're fixated on metals to a degree. Obviously not in silver this week, but in fading shiny stuff, certainly. And of course, fixated on energy. The Ags don't often make their case, but they are doing so this week. Normally when we talk wheat, we talk Chicago wheat, but we're going to go KC wheat this week because it's in our movers and shakers. KC wheat putting up nearly 100,000 contracts this week. So a decently active week, all things considered. About 93,000 contracts going up in KC wheat. By the way, if you're wondering, where's KC wheat trading right now? 667 3/4. That's where that front future is. By the way, if you want to find this, of course, pop on out of equity indexes, go back to that asset class, go all the way to the top of the list to the Ags, and then in product family, grains and oil seeds, and then down 3 slots to KC wheat. That's where we're going this week, listeners. And all this talk about 0 day and the equities, blah, blah, blah. KC wheat's doing, again, 93,000 contracts. 54% of that going up in the May contract that expires in 1 day. So we got some front week, indeed front day action going up in KC wheat as well. So not limited to the equities these days. Again, 667.75. Say that 5 times fast. 667.75 in that front future, up nearly 5%. Just since Monday, so kind of a wild week out there. Of course, if we rewind even farther to the end of our show last week, up 3.15%. What is the vol, you might be asking, in KC wheat? It's looking kind of juicy. That front contract, obviously vol, a bit of a subjective term with 1 day to go, but it's at a 47. If we go out about 8 days to the next contract, that's at a 43, so still juicy. Both of those upsized. The front contract up over 11 points. The 8 day to go contract, 9.5 points it's gained this week. So vol getting spicy. If we go all the way out to June, we'll have about 30 days to go out there. That's at a 36.5, up 4.25 points. So decently spicy for the Ags. You don't see a lot of ag products getting well north of a 30 handle in the vol, let alone nearly a 50 in that front contract. So that's pretty action-packed. Skew-wise, let's take a look. Let's see what's cooking out here. That front contract, the calls were pretty bid last week, 6.2% bid. That has come back to earth a little bit this week, 4.6% bid. Still juicy, but not quite as aggressive. The puts last week, 4.8% discounted. This week, kind of the same deal. Still discounted, but not as aggressive, 3.6% discounted. If you're wondering what is the most action-packed contract out here in a pretty active week in KC wheat, it's the 650s, the 6.5s, a now in-the-money contract, expiring tomorrow, going up about 12,000 times this week. Looks like a lot of mostly closing action. So looks like as we broke through this strike, folks were looking to get the heck out of Dodge. Looks like there might also potentially be some vertical action out here as well, because we do see a decent amount of action on the 640s as well. So about 7,500 of those bad boys have traded this week as well. The big day for these 6.5s was Tuesday, 4,700, mostly closing. About 4,000 today, again, against an OI of about 7,000, so they could obviously be closing again today. 1,100 yesterday, 2,100 on Monday. Again, closing all week long. Worth noting, on Monday and Tuesday, it lines up pretty well with the 640s. There were 2,000 of these 640s opening. And on Tuesday, there were 4,500 of the 640s opening. So it looks like they did that 640, 650 vertical, opening on the 640s and closing on the 650. So a roll down. That's interesting on a week when KC wheat is spiking, they are rolling these calls down. Not usually what you tend to see. I'm trying to look to see if I could find some prices for you on these, listeners. Yeah, here is a 640, 650 call spread traded for $4 exactly today. Let's go back to Tuesday. That was the more active day for that call spread. Didn't really trade for size today, listeners. We have 630, 640, all kinds of call spreads going up. 640s traded straight up on Tuesday for $7.40. Here we go. That call spread traded for $3 exactly on Tuesday. So interesting. Would you be rolling down your calls on a week when KC wheat is spiking? Again, not what we normally see, but that's why we crunch the numbers, listeners. Also, some put action this week. About 4,400 of these 630 puts going up this week. The big days yesterday and today, 1,700 yesterday, mostly closing, and then looks like about 1,400 today against an OI of about 1,500, so it is possible they are closing again today, rallying away from that strike. Not much juice left, I have to imagine, on those 630 puts, so getting what you can left and getting the heck out of Dodge. We also mentioned soybean oil is moving this week as well, so take a look out there really quickly as well. You're going to keep it in the grains and oil seeds. You're going to go down 4 slots from from KC wheat to soybean oil there, listeners. Again, as you mentioned in our movers and shakers, up about 3% this week and putting up 170,000 contracts. So nothing to sneeze at in soybean oil this week. If you're wondering, where's that future? It's 71 3/4 is where it's hanging out right now. Up 3.5 points or 5.25% just since Monday. Obviously back to our show last week's up about 3%. And again, a pretty active week. Unlike KC wheat, though, not all expiring tomorrow. We're going out 64 days to the July contract. That's where about 36% of the flow has gone up this week. So we're going to hang out there. If you're wondering, what is the vol in July soybean oil? It's 26 3/4, actually kind of unched, which is interesting. That front contract with a day to go, the vol has more than doubled. And nearly 10,000 of these 73s have traded, which is interesting. We'll get there. That's the most active contract this week. So the most active expiration cycle is July, but the most active contract going away in a day. And by the way, the vol is doubling over the last week. I got a feeling folks are buying those 73s. But again, we'll get there in a second. Right now, the July contract, again, 26 3/4, the vol kind of unched. A lot of the rest of the term structure, the vol is actually coming in a little bit. So kind of interesting. 2 pockets where the vol is gaining. The contract expiring tomorrow and the July. So interesting stuff. It's also where all the flow is going up. So read into that what you will. The calls in July, 2.4% bid last week, 2.7% bid this week. The puts flat last week, about 3% discounted this week. So puts cheaper, calls slightly more bid. Interesting, not a wild skew, but an interesting one. Let's go back to those Mays that are expiring tomorrow really quickly, the front week, because those look wild. That vol has doubled over the past week. It's up 37 points to 64. Wild stuff. Again, one day to go, so take that number with a huge grain of salt. The skew also wild. 24% discounted with the puts last week. Those are flat. The calls 13% discounted last week. Those are now flat as well, so you can maybe see why that vol's creeping up a little bit. It's like folks were maybe buying the wings out here, including the most active contract. Again, these 73 calls expiring tomorrow. They have changed hands 9,100 times this week. The big day was actually Tuesday. 4,500 going up on Tuesday, mostly closing there. 1,300 on Wednesday, and about 3,000 today against an OI of 4,200. So it looks like folks could potentially be buying back their wings out here that expire in a day. They've made all their decay that they want, and they're closing it out. Or maybe they're done sweating with it. They don't want to deal with it anymore. They just want to take it off. Either way, it seems like buying back some wings, just looking at the vol and the skew out here, listeners. If you're wondering what's bidding up those puts with a day to go, it looks like it's the 71 puts. They've traded 2,700 times this week. 1,700 yesterday, mostly opening, and about 1,000 today, which is exactly as much as the OIs. Looks like folks maybe closing those out as well. But out to July we go. That's where the rest of the volume is going up this week in soybean oil. And we've got the 65 puts changing hands 6,500 times this week. Almost all of that 5,700 of them going up on Tuesday. So Tuesday, the banger day for July puts in soybean oil. Looks like paper mostly bailing on those. The rest of the week, not much going on. Worth noting, the 66 puts have also traded 6,200 times this week. You might say, oh, it must be a vertical. Only 3,800 of those traded on Tuesday. The rest were scattered throughout the week, so it doesn't seem like vertical action. If it was a ratio, and they've been trading the rest of the week as well. And then if you want straight upside, how about the 75s in July? These have gone up 5,500 times this week, 3,600 times on Tuesday. Looks like a 75-80 vertical going up about 3,200 times on Tuesday. And 1,100 more of the 75s straight up going up on Wednesday, 700 today for a total of about 5,500. Let's see, listeners, we're having fun here. Let's see if we can squeeze in one more action-packed contract out here this week. You know, if you go to our full list of action, Bitcoin would actually be number 6 on the light side this week, up about 2.75%. And then right behind it, we've got our old pal WTI, 2.3% on the week. You know, a lot of you were hoping to see a little crude oil on the docket this week. I feel like I would do you a disservice if we ignored it. So let's wrap things up in energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the wild and woolly world of energy these days. You know where to go. Go in that drop down, pop out of ags at the top of the list, go down 2 slots to energy. Then in product family, crude oil and product WTI. And then we're off to the races, just like WTI this week. A 96.25 is where it's hanging out. And that front future as we're coming into the start of this segment. So looking juicy within spitting distance of the power strike again. Up 13 2/3 or 16.5% since Monday. Obviously, if you go back to the end of our show last week, not quite the same story, about 2.3%. But again, if we just did this show since Monday, WTI might be at the top of our movers and shakers list for obvious reasons. There's a ceasefire in the Gulf, but it seems like no one is ceasing firing. Everyone's shooting at and seizing boats left and right on both sides. So makes folks wonder what the heck is going on, and makes folks in the crude market start to drift those prices north again. And that's what we're seeing. Is it a banger week in WTI? It's pretty active. It's not the most explosive week, pun intended, that we've seen. We've seen well over 1 million contracts going up in WTI options during the height of this conflict. Not quite there, but 685,000 on the tape right now. That's well north of the roughly 450 to 500,000 we might expect in a normal week. So getting some extra action out there this week. And where is that action? We're going out to June, 21 days. So interesting, not quite as front week heavy as you might expect, given how near dated some of this movement has been. No, we're going out to June, so that's about 21 days. So folks are giving themselves a little bit of time to work in WTI this week. By the way, you might be asking, what's the vol? You know, the vol, we were just talking about the vol coming back to earth. The vol coming back to earth in WTI. Not quite 2x nat gas anymore. Well, throw all that away. We're getting juicy again, listeners. 86.5, up 17 points exactly in that June contract since last show. Wild stuff here. So when WTI vol is threatening triple digits, you know, you might have to sit up and pay attention. If the price level threatening triple digits wasn't enough to wake you up, maybe the vol will do that for you. But June vol getting spicy. Skew getting a little bit spicy as well. Interesting on both sides, actually, this week. The call is 10.5% bid last week, 11.4% bid this week. So ratcheting up ever so slightly. Again, we've seen a pretty big move, so that's probably why you're not seeing even more of that call wing picking up, because we have gotten a decent amount of that move. But the puts, interestingly enough, the puts are getting smoked. 6.4% discounted last week, 11.7% discounted this week. So interesting stuff out there in the puts. Nobody wants the puts. Everyone's buying the calls. So you take both halves of that skew in context. That does look like folks are leaning towards a little bit of upside out here in WTI. And again, can you blame them given what's going on out there? What is the most active contract in a pretty active week in WTI? Are you going to guess the pars? I wouldn't blame you. That's a pretty good guess. That's usually where the action is. But It's not this week, listeners. We're going above and beyond to the 110s. In June, they've traded 23,600 times this week, including 14,000 contracts just today. That is wild. So, see if I can do a little digging for you, listeners. We do have a 110, 140 call spread. It traded on Tuesday about 3,000 times for $2.28. Let's get to today's flow because that's where the 110s are lighting it up, listeners. June 110s trading for $3.38 straight up, listeners. Interesting stuff out here. 14,000 times. Worth noting, looks like a funky 110, 111 vertical also trading today for about 20 cents. That's traded about almost 11,000 of the 111s have traded today as well. So for whatever reason, some folks in crude oil like those tight verticals. Never been my bag, but some folks like them out there. So that's also probably gumming up the works a little bit out there today as well. But nonetheless, 110's where the action is, listeners. You like that strike? June has about 21 days to go. Can we blow through that? We did it not that long ago. If tensions continue to ratchet up, I think we could easily see the 110 strike again. $3.38 is the going rate right now if you want to take a nibble. If you want a little bit farther out of the money, how about the 120s, listeners? These have traded 13,000 times this week. The big day for those was Tuesday. The 120s are trading right now for about $2.12. So maybe you like that a little bit better, listeners. A little bit farther out of the money, but obviously cheaper. Or you can do that vertical for, it looks like, around $1.25, somewhere in that ballpark. 110, 120, kind of reasonable. Not laying out that much as opposed to 338 straight up for the 110s. By the way, if you're wondering, is there any downside going up? The answer is yes. The 70 puts are trading pretty actively in June this week. They traded 16,000 times, but we talked about that put wing getting smoked, so it does seem like folks are probably hitting the bid on those puts, maybe saying, June 70s, maybe a bit of a bridge too far. Let's take some of that premium, maybe put it to work buying the 110s, maybe legging into a risk reversal. Either way, the 70 puts pretty active this week, going up 16,000 times, trading pretty much every day. The big day was Wednesday, about 5,000 on Wednesday, 4,200 today, 3,500 on Tuesday. It looks like slightly closing there, and about 3,600 on Monday. So a lot of action on these. If you're wondering, what's a 70 put going for? In June, the June 70 puts are trading for 37 cents. So if you think this is all done by June and you want a little bit of a downside nibble, skew's getting smoked out there. So vol is up, but the skew is down. So a little bit of column A, a little bit of column B. 37 cents. If you think that's cheap, maybe you like a nibble, or you think that's pretty pricey, sold to you. It seems like a lot of folks might be leaning that way. Let's talk about the pars really quickly as well, because those are obviously a psychologically important level. Those are trading for $6.20 today. They have changed hands 15,000 times. Again, this is all June. 110s trading 23,000 times. 109s trading 21,000 times. 100s, the pars, trading about 15,000 times this week. And then the 120s, our old friends, going up about 13,000 times. And the 111s, because of that ridiculous vertical, trading about 13,000 times this week as well. So a lot of upside, as you might expect here, in all things WTI. All right, and that's going to do it for this episode of TWIFO this week. I snuck some ags in there, which is always fun to shake things up. Of course, equities, always going to spotlight those on the show. So many of you are fixated on those markets these days for obvious reasons. And then, of course, the other side of that these days is crude. Got to squeeze that in on the show today as well. A lot of fun. If there's a complex, there's a product that's lighting it up out there that you are saying, that's interesting. Maybe you could break that down on the show. You know where to find us. Hit us up. Let us know. You never know. Maybe it'll make it on the show next week. But that's going to do it for TWIFO this week. Make sure you're checking out cmegroup.com/TWIFO, TWIFO. If you want to run your own product scans on whatever product floats your boat. If you want to do cash-settled butter at 3 a.m. on a Sunday, it's there for you. cmegroup.com/TWIFO. That's going to do it for us. back again after the closing bell today to talk all things Thor. No, not the son of Odin, but the hot options report. What's lighting it up? I got a feeling Tesla is going to be there. What else is going to be there today? Let's go find out on the hot options report. And we're back again tomorrow to break down another wild week in Vol. What's Dr. Vic's up to? What special guests will join us? What the hell is going on in Vol? Tune in to Volatility Views tomorrow. And then if you want even more fun, and dare I say it, a little bit of danger, a little bit of spice, check out the Pro, because we come back for Options Oddities, and we get up to all sorts of mischief out there. We were just talking about figs on the last show. That calendar's looking pretty nice. A lot of other fun stuff going on out there. Wheels for days, you name it. All sorts of unusual activity fun. Check out the Pro. TheOptionsInsider.com/pro is the place to go to learn more. And then back again next week, all the way through to next Thursday. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.